Well, now we sit here and we wait to see what Jerome Powell and the Fed is going to do today. We know that, of course, inflation last month came in under expectations, 3%, still higher than the Fed target at 2%. But the expectation is that the Fed will ultimately end up raising rates today at their meeting. And we now say hello and good morning to Steve Moore, former economic advisor for Donald Trump. Always great to have him on in Kansas City on KCMO Talk Radio, 710 AM and 103.7 FM. Does a great job. Steve, take us through what you're expecting today as you look at the landscape and what Jerome Powell is going to do.
Hey, Pete, it's so good to be with you. Hope your summer's going well. So it's not an expectation. It is a fact that the Fed will be raising rates by another quarter percentage point sometime later today, and that means that this will be, I believe, the 11th increase in rates by the Fed. We've never ever seen anything like that. 11 rate increases in just over a year. So remember, the rates were close to zero a little over a year ago, and now they're up to, I think, 5.5% and probably headed to 6%. Now, why should the average American care about that? Because it affects every interest rate in the economy. So mortgage rates will go up, consumer loan debts will go up, business loan mortgage rates will go up, and so it's a downer for the economy for sure. But this is the price we're paying, Pete, for the $6 trillion spending spree that Biden did, that he's bragging about. It's been such a huge success. The inflation rate was 1.5% when Trump left office. It went up to 9.5%, almost 9.5% last summer. Now, the good news, it is now down to about 3 or 4%, but that's still way too high. And prices today are 15% higher than they were when Trump left office.
So what does this mean? I mean, everyone's, the big soft landing conversation, Steve Moore, that has come up over the last several months since the Fed started raising rates. I mean, are they able to pull off this soft landing because employment remains strong, or is there something else? Is there some other shoe we're waiting to drop here on this?
Well, first of all, I mean, let's not kid ourselves. This is not a good economy right now. This is an economy that's growing way too slowly. We have lower labor force participation than ever. We do have a lot of jobs out there. That's good news. But where are the workers? Oh, they're not working because we're giving people so much money of government money that they don't have to work, which is crazy. We've seen, as I just said, prices are 15 to 16% higher today. Even if we took inflation to zero, Pete, we'd still have these. Look at the price of eggs. Look at the price of meat. Look at the price of buying a plane ticket. Look at your rent. Look at all these things have gone up and put a huge strain on American families. I mean, the average family today is about $4,000 to $5,000 poorer than they were when Trump left office, because the inflation is ravaging through. Inflation is rising faster month after month after month than the wage increases of workers.
Steve Moore is joining us, FreedomWorks, former economist under the Trump administration. Now, I know, you're an economist by trade, Steve, but I know you follow the markets. The markets are having this crazy year. What's it, up
Amazing.
10% year to date? How do you explain that with high interest rates? People are parking their money, making 4 or 5% with no risk. The economy, as you know, on Main Street is not well. What's going on there?
Well, it has been an amazing bull market run for the last couple of months, no question about it. Well, part of the explanation is, remember that last year it was one of the worst years ever for the stock market. I mean, stocks fell by 25 to 30%. The NASDAQ was way, remember that, Pete? The NASDAQ crashed. And so what we're just really seeing now is a recovery of those losses. So, am I happy that 401k plans are going up? Absolutely, yes. But when you adjust for inflation, because you have to adjust your stock prices for inflation too, stocks are way, way below where the trend line that we saw under President Trump.
Steve, when you look at, this economy and what it would take to really turn it around, I mean, I know we're a ways away from a potential Republican president being back in the White House, but what are like, 2 or 3 of the things that you look at and you say to yourself, hey, if they get back into power, boom, 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 1, 2, 3, here's what can be done right out of the gates?
Well, it's funny you should ask because I spent Monday with President Trump in in his New Jersey, home and Bedminster, and we talked a lot about that. And you've got to get back to deregulation. Get the government off the backs of our businesses. One of the things that President Trump talked a lot about was why aren't we producing more oil, gas, and coal in the United States? I mean, we're $150 million a day, Pete. $150 million a day we're forfeiting because we're not allowing more drilling and a kind of drill baby drill policy here in the United States. We have more oil and gas and coal than any other country in the world virtually. Why aren't we producing it here? Why are we buying it from Saudi Arabia and Russia and Iran? Does that make any sense?
No, none. Well, now that you dropped that nugget.
What's that?
I said, now that you dropped the nugget on us, Steve, that you were at Bedminster on Monday talking to Donald Trump, what kind of mood was he in here as he sits in first place in the polls?
Yeah, he was over the moon on Monday because those new Fox polls had just come out showing he's got a commanding lead in almost every one of the early states in the primaries. Now, look, this is still July, and the voting doesn't even start for another 6 months, so there's a lot of time, and these things can shift around. But he is looking like he has a commanding height, and I'd bet right now that he is going to be the nominee. Although, look, Republicans have a lot of great. I know people listening to this probably like a lot of people like Ron DeSantis. A lot of people like Nikki Haley. I like Vivek Ramaswamy. I think I like Tim Scott. I mean, I think it's a great field of candidates, don't you? And look at the Democrats. By the way, I still believe, Pete. I really believe that that Joe Biden will not be their nominee. Do you see that? I mean, can you imagine him 5 more years in the White House? Can you imagine that?
No, I can't. And I got a chance to visit with Bill O'Reilly last week, and he sees no way that he is the nominee. Now, speaking of Vivek Ramaswamy,
and by the way,
the
person I think they're going to want to turn to, because they've got a big problem. Obviously, they can't make Kamala. She's like a joke, right? And so, who are they going to turn to? Look out for Gavin Newsom, the governor of California, because he's very charismatic guy. I know Gavin Newsom. But he's liberal as the day is long, and look what he's done to California. So it's going to be an interesting race. But and look, DeSantis has been an incredible. I mean, I love the contrast between Ron DeSantis and what he's done in Florida, and then look at what's going on in California under Gavin Newsom. So we'll see, but. I think that you started to mention Vivek. I like him a lot. What do you think of him?
I am very intrigued by him. I think he's able to talk common sense, and he's able to deliver complex messages in simple ways. And I saw you guys wrote a piece together that I read last week about private sector hiring slowing down, and it's the government that has done the most hiring over the last few months. What about that, and what that means for the economy at large? Yeah,
I mean, so Vivek is a good friend of mine, and he's a smart guy, and he's, I don't think he's going to be president in 2025, but he could be president someday, or he could be the Commerce Secretary or something like that. And he and I got together, we were looking at these numbers, and I mean, we both almost fell off our chair. Over the last 6 months, the biggest growth sector in the American economy, Pete, has been the government. They've been the major employer. The government hired more new workers in the last 6 months than the construction, manufacturing, retail, and wholesale sectors of the economy. Now, come on. The government should be shrinking right now. Hello? We're running a $2 trillion deficit. $2 trillion. Don't you think maybe we should be, sucking in the stomach and tightening the belt on government spending instead? And by the way, COVID ended 2 years ago. So we should be contracting the government and growing the private sector, and just the opposite is happening.
Well, he's a man who makes way too much sense. That's why we love having him on the show. Steve Moore, FreedomWorks economist, of course, formerly with the Trump administration. Steve, keep up the great work. Thanks for all you do. Hope your summer's going well, and we'll talk to you soon.
Okay. Have a great week ahead. Take care.